Hey guys, this is Fractality here. By the way, I'm gonna change the name of the channel to Fractality because I like that better. Um, so, yeah. Anyways, I just want to do a midweek update. Now, it's the weekend, but I didn't do the midweek in the middle of the week this week, obviously. Um, but I will. I'll try to do that going forward. But I still want to upload this video, sort of as a review on the week, and then there will be a forecasting smart money bias video coming out tomorrow. Try to get that done for y'all as I do my weekly forecasting. And yeah, I just want to review kind of the things we talked about on the last video. If you watch this one, you'll see. Yeah, you can watch it and see what I said just to verify, but I'll just assume that you've seen it. Basically, we got exactly what we were looking for in terms of dollar bullishness. Monday, this is Monday, so I believe I mentioned taking out Friday's low as a possible scenario to send the dollar higher. That's what we got. Either way, even if I didn't mention that, that is what happened. So that was previous day's low, and then we shifted structure after taking out previous day's low inside of this expansion leg, shifted, broke structure here. So this is really a higher high after taking out the liquidity, and then we just kept going higher from there. And so once the New York session proved it was bullish, it was pretty clear that we'd be going higher, so you'd be looking for stop runs or fair value gaps to enter on 15-minute time frame. But anyways, so the dollar did in fact go higher, which is great. And I'll save my forecasting for the next video, like I said. So this will just be a quick one. The euro dollar continued going lower, obviously. Continued going lower since the dollar went higher. And you can just see that, let's see. Oh yeah, something I wanted to mention. You can see that the euro dollar went and took out this low here on Thursday. But I wanted to mention, last week I talked about the idea of price rating liquidity into internal imbalances. So that's why I drew this range. So this is exactly what I was doing a review of dollars price action on like the daily chart, weekly chart. This is exactly the same principle here. So expansion leg, retracement into an imbalance, and this is a daily fair value gap, by the way. It's very clear here. So yeah, retracement into the imbalance while taking out liquidity. That's all you need, all of that. And then you look for like the structure shift, which we got. And then you can go short, expecting price to come to the external low of that expansion leg, right? That's pretty much my model, or at least one of them, and it works very well, and you see it all the time. So we got one of those on Friday, but in terms of the overall market, yeah, it was just very heavy, and this is the easiest time to trade. You want to be looking for markets that are clearly heavy like this. They're just the best. They're real clean and easy, like super good. And then GU, I had all these levels marked out on the last video. We hammered them by Thursday. They were taken out, and then we just had a bit of a retracement on Friday. But yeah, I mean, all my reasoning for why I was bearish is in the last video, so I won't explain that again. Just quickly going through. This is Aussie. It was fantastic. Felt that this was pretty heavy, and it clearly was. Whenever you see, so we had equal lows here, right? Low here, equal lows. We're getting expansion lower, a retracement to take out liquidity and it fails, in that scenario, from after that raid, after that raid plus the shift in structure, from that point forward, it's easy trading to go lower or higher in the other situation. So, if you're ever looking for a market to trade and you don't know which one to trade, look for this sort of scenario. So obviously it's not perfect, but it's really good. That's what I look for. New Zealand was even heavier. I actually thought Aussie would be the weaker one, but New Zealand ended up being the weaker one after they had some red news this week. Dollar CAD's still confusing to me. I'll skip past dollar yen. Platinum, really proud myself here. So I called this short, and looks to me like it'll keep going lower, but we'll talk about that tomorrow or in the next video. But so this is that expansion leg here. Okay, let's go down to 4 hour expansion leg. Here it's just engineering liquidity. It goes for the low, but then comes back up one more time. So now this is this green line here, not this one. This green line is the external objective, external liquidity. So it goes up here, raids this high, okay? Raids that high into the imbalance. So that's your retracement, that's internal liquidity of this expansion leg. And then once it fails, it's game on. Yellow is the shift, like a confirmed shift. That's 4 hour, but you could have been looking at the 1 hour as well. 1 hour, 15 minute, you gotten in. I mean, really, if you want to be shorting turtle soups, this is where you short them. You can short this before the shift, but you really need some experience to do that. That's what I do. It's not a point of, doesn't mean anything. Like it's just as good to wait for the shift, and you might have a higher strike rate, and that might be better for you anyways. But so platinum looks heavy, copper. So I mentioned copper, I would be looking for it to raid this. We didn't get the raid. I also mentioned if we don't get the raid, I don't care. So I don't care that we didn't get it. We got it in platinum. We still have equal lows here. I would expect it to continue going lower. We're in the seasonal bearishness, and that's confirmed by market structure. So really good time to be shorting those metals. I still don't know about oil. Now, for the indices, this is ES. I mentioned we might fail after this raid from last week and then start going lower. Although, admittedly, I was very unsure, and I didn't trade this at all this week. But that is what happened. So we took out that liquidity, and then we failed, and then retraced. But obviously, as you can see, we recovered. And so it looks like it wants to keep going higher. And I'm quite sure of that because NASDAQ is also very bullish. Actually, I don't know if it wants to keep going higher. It looks bullish, and I'm not doing my forecasting yet because I haven't done that analysis personally yet. But the point is, NASDAQ was clearly bullish, but I wasn't trading it either of these, so whatever. Something worth mentioning is the DAX. DAX is the German indices, and this was this was 2021, okay, this is January high of 2022. We came up and took that out and had a really nice reaction off of rating that. Again, I wasn't shorting this, I wasn't in this, but it was really, really clean if I had noticed it, especially once we took out that high and shifted lower. Come up here for the imbalance. That's like sort of your YouTube model, but on like a 4 hour time frame. Would have been a really nice swing trade to at least go to like, easy target would be like the midpoint of this whole market maker model. But obviously it went lower than that. So that was nice. Some stuff to study for yourself. But that's it. I want to keep this one short. In the future, this will be a midweek update if I have the time to do it. But thanks for all the support so far, and let's keep going. Bye, guys.